We leave third quarter on a positive note. We have much better macro than when we entered third quarter. We have higher equities, and also most bond classes have seen very nice performance. Especially emerging markets have surprised significantly, and we have seen an epic rally in emerging market bonds. So entering the fourth quarter, should we be equally positive? In fact, macro still looks very positive, and we believe we still have a base case scenario that we will see moderate positive returns in bond markets. However, there are certain risk factors that we need to identify and need to address. First of all, the rise in commodity prices lately could give a push and a pressure to inflation and bring global benchmark yields up to a higher level in the coming quarter. Secondly, the action we see from central banks at the moment could also point towards some jeopardizing into the bond market, especially core bonds, US treasuries, and the European government bond markets. So inflation and central banks is definitely a risk factor here in the fourth quarter, especially for the bond markets. The problem is that if we see higher core yields, especially on a sudden spike, we could see emerging market bonds and higher yielding bond markets being really hampered by this, and we should be careful when looking into investing in these markets in the fourth quarter. Another risk factor coming up is the continued geopolitical tensions in North Korea. This is something that could have a significant impact on all financial markets if we do see an escalation of the conflict. However, we believe that the risk is low, and if we see an escalation, this will be a swift and like a one-off impact into the market. So a brief experience for the financial markets. However, geopolitical tensions will have a positive impact on core yields and core bonds. So we will see lower yields and performance in core bond classes, as the core bonds, in a case of escalation, will be the preferred safe haven asset. A third risk factor, or not even a risk factor, but a factor that we need to take notice of, is the development in China. We believe that China is the growth case for the global economy, and also the place where we do see inflation being born at the moment. So we have all eyes on China in the first quarter, especially as we see the financial system in China develop and emerge now with the invention of Bond Connect coming into action third and fourth quarter of 2017. We should not neglect that when you open a whole new financial market for the entire globe to enter, we have impacts in a positive way to other financial markets around the globe. So we believe that we could see continued positive developments in China the coming quarter.